Hello and welcome to Tax Matters. I am Chiamaka Ohauchi. Once again, happy birthday to Nigeria at 59. It's now the last quarter of the year 2019, and our prayers is that your business will grow and that you have advancement in your personal lives. And of course, when your business grows, you will pay your taxes. Last episode, we were celebrating our youths, and that centered around the story of the 5th edition of the National Tax Debate organized by the Tax Club, University of Lagos. 4 teams made it to the finals held on Friday, the 20th of September 2019. And of course, because we have only 25 minutes to do this week after week, we were only able to serve you the deliveries of 2 of the debaters, the representatives of Team G and Team E. Today, we want to serve you the remaining 2. The topic is a blueprint for the taxation of the digital economy. Let's get down straight to business.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that request stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
I'm here to talk about a blueprint on the taxation of the digital economy. Before I proceed, permit me to reel out some very interesting facts. Did you know that Uber, the world's largest taxi company, owns no vehicles? Facebook, the world's most popular media owner, creates no content. Alibaba, the most valuable retailer, has no inventory. And the Airbnb, the world's largest accommodation provider, owns no real estate. The next question is, what is the digital economy? The digital economy is also known as the new economy, and it's simply a term used to encapsulate all economic processes, transactions, and interactions that are done through digital technologies or computer softwares. The digital economy is fast becoming innovative and far-reaching. According to statistics by Statista.com, it has stated that as of 2016, Uber had 50 million users, 2017, 75 million users, 2018, 95 million users, and as of 2019, Uber now has 110 million users, and the year is not over yet. In 2018, the Nigerian Investment Promotion Commission explained that the Nigerian digital economy is expected to generate $88 billion and create 3 million new jobs by the end of 2021. This is how far-reaching and important the digital economy is. However, the digital economy is not without its own challenges. These challenges include tracking transactions for the purpose of taxation, and secondly, the rule of physical presence as contained in Section 13 of the Companies Income Tax Act of 2011, which makes it difficult to tax non-resident companies. My team and I have put together a blueprint to tackle these challenges. There are 3. First, global collaboration. Second, amending our tax laws. And third, taking a cue from developing nations. Moving on to the first, global collaboration. When we talk about digital economy, 2 questions first come to mind. The first is, where is value created? And the second is, where should multinational profits be taxed? While some experts are of the opinion that multinational profits should be taxed at the market jurisdiction, which is where value is created the most, and which is where they have more users and more content. Other experts are of the opinion that multinational profits should be taxed at the resident jurisdiction, which is where they have their headquarters. A discourse of this nature cannot be done without establishing a strong legal framework for such system, bearing in mind that without legislation, there can be no taxation. As such, this brings about double tax treaties. Double tax treaties are simply agreements between 2 countries. And according to the Research Journal of Finance and Accounting, volume 6, number 12 of 2015, it has provided diverse benefits of double taxation. This includes 1, providing legal certainty. 2, reducing cases of base erosion and profit shifting, basically tax avoidance. 3, it allocates taxation rights between signatory countries. And 4, it attracts foreign direct investment. In an article published on mondak.com by Anderson Tax by Oladejo Adeyemi and Ikechi Chukwu on the 4th of September 2019, has shown that Nigeria currently has double tax treaties with only 13 countries, out of which 2 have not been ratified due to the provision of Section 12 of our Constitution, which makes it mandatory for the National Assembly to domesticate all such treaties. Meanwhile, developed nations like the United Kingdom has double tax treaties with 131 countries. Countries like Canada have double tax treaties with 92 countries, and even Malaysia has double tax treaties with 68 countries. Therefore, the role of double tax treaties cannot be overemphasized. Secondly, the amendment of our tax laws. The provision of Section 13 of our Company Income Tax Act implies that where non-resident companies do not have a strong physical presence, they cannot be liable to income taxation. The impact of this is that if a software company, for instance, provides services to users in Nigeria and it cannot be shown clearly that they have a physical presence, then the revenue harnessed from such transaction cannot be taxed in Nigeria. Secondly, the provision of Section 2 of the VAT Act. The provision of Section 2 of the VAT Act states that where supply is not done in Nigeria, then such income you can't extract VAT from it. Now, the case of Vodacom Business Nigeria Limited and FIRS may be a dissenting one. However, that is not the case. Because in this case, the court dissented and distinguished the fact that the bandit supplies were done through an equipment in Nigeria. And as a result of that, it can almost be said that the supply was done in Nigeria. And so that case was distinguished. In other words, the Section 2 of our VAT Act is still a problem in Nigeria. Finally, taking a cue from other nations. In India, the 2018 Indian Finance Act has made it possible for them to tax non-resident companies where it is shown that they have had a significant economic presence, regardless of whether they have a physical presence in India or not. This act came into effect in April 2019 this year. And of course, as earlier stated, this is the problem that the CETA of Section 13 has. Using the European Union as a case study, a proposal was put before them on March 2018, which seeks to create a virtual permanent establishment, which will make it possible for digital companies operating in member nations of the European Union to be taxed regardless of whether they have a physical presence or not. And this is something that the AU can adopt. Immediate analysis of the income of the content creator. I presume a lot of us know that the highest content creator on Instagram is a lady called Maraji. Now, for every content she creates, she gets nothing less than 1 million. On the assumption that she creates nothing less than 2 posts per week, she gets 2 million naira in a week. And in a month, that is 8 million naira. Now, in a year, that is 96 million naira. If this were a company and we are to tax this at the annual rate of 30%, that is going to be an added revenue to the economy of 28,800,000.
Now to the last speaker, the representative of Team I.
My name is Yusuf Olaoluwa, and let me show you the blueprint for the taxation of the digital economy. First, I must introduce you to the concept of the digital economy. The digital economy is the leader of a disruptive revolution that is putting rigid companies out of business. It is a worldwide network of economic activities, commercial interactions, all enabled by ICT. Presently, the digital economy is valued at $3 trillion. That's how massive the digital economy is. And so why do we need to tax the digital economy? Simple. Because we cannot afford to not tax the digital economy. What we must realize is that there is no such thing as a separate digital economy, but rather, the economy itself has become digitalized. More importantly, we need money. The digital economy is a way to resource revenue for the federal government. 2019's budget stands at 8.9 trillion, and the speculated budget for 2020 is at 9.7 trillion. Taxing the digital economy is a way to achieve this. So how do we tax the digital economy? My policy, ROPE, ROPE, redefinition of permanent establishment. In the following slides, I will tell you why we need to redefine permanent establishment, and I will give you my own personal suggestion, the digital services tax. Now, let's start with permanent establishment. Any meaningful contribution towards redefinition must first start with a close look at our laws. Under Section 13, subsection 2 of the Companies Income Tax Act, it is a requisite that to tax the profits of a non-resident company, it must have a fixed base in Nigeria. Similarly, in JGC versus FIRS, the Federal High Court ruled that unless a company has a fixed base in Nigeria, you cannot tax it. This principle is not only known to Nigeria. Under international law, it is known as permanent establishment. However, permanent establishment is problematic. The problem with permanent establishment is that things have changed. Before the economy got digitized, a company would definitely need to establish a physical presence to carry on business. Now the rules of the game have changed, and we must change with it. In India, for example, here's how they are tackling their fixed base principle. Under the Finance Bill 2018, they've redefined permanent establishment to include significant economic presence, which means that irrespective of whether or not there's a physical establishment, a company will be deemed to be taxed once it has significant economic presence. Ladies and gentlemen, even if there is no Facebook office in Ikeja, we can agree that Mark Zuckerberg's people have a significant economic presence in Nigeria, and they must be taxed. It is one thing to redefine, and it is another thing to find a framework that works within the Nigerian tax frame. This framework is the Digital Services Tax. The DST is the next way towards implementing taxation of the digital economy in Nigeria. The DST is simply a way to impose a 4% levy on the gross revenue of digital transactions with Nigeria. Under my policy, once a company is deemed to have significant economic presence, the DST will apply. And under my policy too, here are the criteria before a company is deemed to have significant economic presence. 1, if it exceeds 50 million naira in annual revenue gotten from digital transactions. 2, if it has a user base of over 250,000 people who access its digital services in Nigeria. And 3, if it has entered into more than 2,500 business contracts for digital services with Nigeria. The DST is the next step towards taxing the digital economy. Ladies and gentlemen, the DST is simply a way for our laws to stop playing police and thief with digitalization. Quite honestly, our laws are too slow, and the digital economy is too fast. I do commend the efforts of the FIRS in levying VAT on online transactions. Through a directive issued in August, they made the directive to start levying VAT on online transactions. However, it is problematic on 3 levels. 1 is that it increases the risk of double taxation. Quite honestly, not all the businesses who sell goods online have no physical establishment in Nigeria. Therefore, there is a high probability that those goods have already been taxed once. 2, how does FIRS intend to watch the banks when it comes to VAT exempt goods? There's a long list of VAT exempt goods, and one of them is basic food supplies. We know that the banks will charge us. How do we intend to get these charges back from the bank? And 3, very importantly, VAT by its very nature shifts the burden of taxation to the final consumer. What this means is that levying VAT on online transactions is another way for the government to tax you, the final consumer, while conveniently leaving out the digital companies it set out to tax in the first place. It is my submission that an international concerted effort is what's best. However, a key principle of international policy is that you look out for yourself first. And the DST is simply a way for Nigeria to look out for itself first. Here is a summary of ROPE, redefinition of permanent establishment. So right now, the FRS has the ITAS. We suggest that they upgrade it and increase it to taxable goods and services, persons and companies. 2, we suggest an amendment of Section 13, subsection 2 of the Companies Income Tax Act. 3, we request we follow the money. No online transaction goes without being to the bank first. So follow the money through the banks. And 4th, the digital service tax. The digital service tax already has best practices in Italy, in France, in Hungary, and in the United Kingdom. Ladies and gentlemen, through my proposal, I present the rope that saves us, the rope that taxes the digital economy. Ladies and gentlemen, I give you the blueprint for the taxation of the digital economy.
Mrs. Angel Fadaunsi represented the Executive Chairman FRS, one of the major sponsors of the debate from inception.
Today's theme, Building a Nation on Taxes, is such a relevant theme in Nigeria's economic story today. The fluctuations in oil prices that have been happening last week remind us again of how important it is for us to move on to more sustainable revenue sources. We at FRS have been working steadily on growing the non-oil revenue of the nation, and listening to our budding tax experts debate today, it's very pleasing to see that we're on the same page. Thank you very much for being partners in national development.
At the end of it all, Team L came fourth with 70.63%. Third place went to Team G with 74.5%. Team I came second with 89.38%, while Team E carried the day with 89.68%.
Congratulations to Team E, the winners of the tax debate 2019. Are you ready to rumble? Some nice Uniland! Congratulations! Congratulations!
Big congratulations to Team E. It has indeed been exciting, very exciting, and we are proud of our youths. Surely with these ones, our dear country Nigeria is destined for greatness. Still talking about our great country Nigeria, or if you like, making Nigeria great. And of course, the role that the young ones can play in all of that. The Executive Chairman, Federal Inland Revenue Service, Mr. Babatunde Fowler, is very well reputed to be a lover of youths. Of course, we all know for a fact that he has great respect for the sacrifices of military men to Nigeria's corporate existence, which is of course why the FRS, under his watch, adopted the book on Taxpayers Are King, written in honor of President Muhammadu Buhari, a quintessential military general, retired but not tired. This book, Mr. Fowler presents to every visitor to Revenue House. Recently, Mr. Fowler paid a courtesy call on the Chief of Army Staff, Lieutenant General Tukur Yusuf Buratai. The visit was in continuation of the symbiotic, mutually beneficial relationship between the FRS and the Nigerian Army.
Some may ask, why is the chairman of the Revenue Board coming to pay a courtesy call on the Chief of Army Staff and his men? The reason is very simple. I believe very strongly, and I believe and speak on behalf of most Nigerians, that any individual, man or woman, who is prepared to lay down his or her life for the rest of us deserves a lot of commendation. So first of all, I'd like to commend you for your service to the nation, to ensure that we have a peaceful environment. Second of all, I'm happy to brief you that under this dispensation, over the last 4 years, the economy has come out of recess. The economy is growing. Based on the revenues that we have generated over the last 3 years, between 2016, 17 and 18, there has been a steady increase. The non-oil revenue has increased to the highest ever in 2018 at a total collection of 5.32 trillion, out of which the non-oil accounted for 57%. So that basically tells us that we're in the right direction. We're also here to let you know that we'd like to partner with you We do have some projects, CSR projects, that would be willing to assist the Nigerian Army or other things in terms of education. We're quite aware that you do have some institutions of education for the youth.
You know the position of our economy as of 2015, and I've understood from your brief tremendous achievements have been made, and this has confirmed the popular comment on you as the administrator with the Matters touch. So I want to say congratulations for this great feat. You've done this country proud by the increased revenue generation of the Federal Revenue Service and by implication to the stability of our country.
The Chief of Army Staff seized the occasion to appeal for more support from the FIRS.
Having a series of numbers of schools, the command schools, the children's schools, and indeed of recent the Nigerian Army University, which you're very much aware of. These are areas that would appreciate your intervention through these corporate social responsibilities which you've known.
There was a robust discussion session on the remittance of VAT, withholding tax and pay-as-you-earn deductions by the Nigerian Army.
Some of these contractors that work for us, we sometimes, they will be pressuring us to say we've not remitted part of the withholding, the VAT or so, and while probably they have not even finished their job. So in that case, we receive a lot of complaints. But by and large, we always ensure that they complete their job before we give them the clearance and remit whatever tax that's with us.
The law on deduction of withholding tax and VAT is very clear. Definitely we know that you as an institution, you are not liable to pay taxes. And like you rightly said, sir, this has to do with the contractors that work with you. They are the ones that are paying the income tax, and they are also the ones paying looking for VAT, then add VAT when they render services to you. The law is that this should be done monthly, supposed to make your filings on a monthly basis. Anytime you make a payment, you deduct that withholding tax. And not later than the 21st day of the subsequent month, this is supposed to be remitted to the FIRS. Why the companies come back to you to complain is because the withholding tax and advance payment of taxes for them. And then when they file their return at the end of the year, they will say that you have deducted this much from your taxes. And ordinarily, they are supposed to use that to offset their tax liability because an advance payment of taxes. Now, if you do not have that tax in our record, it becomes a problem for them. So that's why they keep coming. So we'll be very happy if this could be done on a monthly basis. The timeline is 21st of every month to file those returns for transactions that took place in the previous month.
Yes, military personnel do pay taxes. They pay as you earn. Unlike other ministries, departments, and agencies of government, the Army also acts as collecting agents for VAT and withholding tax from vendors and contractors. The meeting ended with exchange of gifts. A few days later, the executive chairman FIRS headed for Zaria, where he chaired the annual speech and prize-giving day ceremony of the Nigerian Military School, Zaria. Part of activities at the ceremony was the commissioning of the newly renovated and furnished Major General Ogundeko Hall, sponsored by the FIRS. Mr. Fowler was on hand to present awards to those among the boy soldiers who excelled in academics and other spheres. Mr. Fowler himself also received an award. At the end of it all, Mr. Fowler spoke to the press.
Government cannot do all by itself, regardless of how much government tries. We collect revenue on behalf of all the 3 tiers of government, federal, state, and local government. And I can tell you that what we collect is still not sufficient. So the private sector has to join hands and also support institutions of this nature.
Nigeria is a great country and it will remain great. All that is required is for all hands to be on deck by paying taxes as at when due. Go out there, do the needful, and remember, we'll be here next week, same station, same day of the week, same time of the day.